Welcome back to 5 charts and 5 charts only, this time with a twist. So we'll still be talking about 5 topics, but there'll be multiple charts per topic, so maybe a little bit longer than last time. So let's get started. Let's first discuss the trend for the S&P 500, and we wrote about this on Tuesday, talking about 2 key gauges to help us, and obviously they're ones we know about, talk about a lot. It's the 20-day moving average here in green, and the 14-day RSI on the bottom panel here. And so as you recall, as the market was coming back really strongly from April, it overtook just about every resistance point and moving average there was, one of the first ones being the 20-day moving average. And so it stayed above that line for a long time, of course, not undercutting it on a closing basis until right here, which was August 1st. And that was one of the longest runs in history. And so there were 2 thoughts about that. Number one, of course, it would end. And then when it did end, it could mark a key topping pattern, or at least something much more substantial than we've had in terms of a pullback up to that point. As we know, that did not happen. And we continue to percolate near the highs, coming back, testing that line again, and then moving higher. And even though it didn't undercut that line, in May, it did come close to it a few times. And so it just tells us just how strong or how consistent the bid has been up to that point. And eventually it is going to get undercut more than we've seen before in a much more aggressive way. But if you combine that with what's been happening with the RSI, we can get, again, a good indication of momentum as well. Now, a few things about this. Number one, even though the S&P has been making highs basically the whole time since overtaking the February high here in June, the RSI hasn't been overbought the whole time. And along the way, we've seen a number of negative divergences, which we discussed about here. And of course, many other people have brought it up as well. And so those are warning signs, not signals. And really, if you think about it, it's the normal ebb and flow of an uptrend. Momentum gets kind of overheated, then comes back down, allows things to cool off as when buyers step up. So it's not really about staying overbought or identifying every negative divergence and think that's going to end this run. It's really more about paying attention to what that RSI does on pullbacks, right? Especially on bigger ones where you really don't want to see that get too much more below the 50 level as it pulls back, because as we can tell from here, when that was occurring, even the beginning stages of 2025 and 2024 got an indication that things weren't steady enough. That combined with the fact that bullish patterns were failing really give us an indication that maybe things were changing. As you can tell here as well, the S&P was oscillating around that 20-day moving average a lot, not really staying above it or below for that long. So much different environment than what we saw up to that point. And so we can compare this, of course, to what happened in 2023 and 24. We talked about this as a period to look back to for numerous reasons. This is one of them. As we can tell, the same type of thing happened. Blasted back above that line in early November, didn't undercut it until the very end of 2023, beginning of 2024, and then numerous times after that until finally pulling back after the March high into April, finally got that higher low again and overtook it once more. So that was a 6% pullback. It seems obviously not that damaging now, but considering that, again, the S&P was really down much more than 2 or 3% at a time, it felt a lot worse as it was happening. So at the time, of course, the RSI also sliced below. It actually got to oversold right away. But again, it's what happened after that, which was more important. Got the bounce, got the higher low. This was key in early May, and that's what gave the S&P the ability to form this, you can hardly see it here, but this cup and handle pattern, the breakout taking it back above the 20-day line, which of course has stayed above up until late July. So number 2, SIL Silver Miners, right? This has been obviously a huge winner this year. I wanted to look at this really as an educational tool as well, because as we talk about a lot, bullish patterns are the key to uptrends. And if we get smaller bullish patterns working, they create not only uptrends, but foundations for bigger bullish formations as well. And so with SIL Silver Miners, this is what it's done since the beginning of the year. It's been trending higher and up a lot, of course, been amongst the leaders the entire time. But it's been a series of breakouts, consolidations, which led to continuation patterns or bullish formations, however you want to call it. But because of that happening over and over again, that's built the uptrend. Now, keeping that in mind, again, this is about 8 or 9 months worth of price action. If we put it here on the weekly chart, this is exactly what that is. So you can't really see these bullish patterns zoomed out on this weekly perspective. But as we know, by those working out, it literally created this uptrend, created this breakout here as well. And we can tell all of that was needed here to make this consolidation area look like the right shoulder of this really big multi-year inverse head and shoulders pattern seen here in log scale. So that's now breaking out, as well as even before that happened, this double bottom formation. So we have multiple small bullish patterns. We have 2 bullish patterns in here, as we can tell on the bottom. Since early 2024, the weekly RSI has oscillated between overbought and the midpoint, as well, confirming the move from a momentum basis too. So let's zoom out even more. Monthly chart going back to 2009, or really when this ETF started the trade. And we can tell, remember, this big green inverse head and shoulders pattern is this part of a double bottom, or we can call this a cup and handle pattern going back to 2013, right? So it goes all the way back here, right? Multiple bullish patterns on a daily chart, 2 bullish patterns on the weekly chart. We identify 2 on the monthly chart as well, with this bigger one from this page right here, literally creating the handle of this massive one, right? And so if SIL can continue to hold above the low 50s here on prospective weakness, then this whole thing becomes a reality. And of course, the upside target will be much, much higher than even this last all-time highs back in 2011. So number 3, XBI Biotech, of course, has been doing well too. It's a big part of the comeback of small cap growth. And so we talk about a lot of trading boxes. Again, very simple, but it categorizes this move extremely well from our perspective, where you had, of course, the comeback here, the higher low, which produced a cup and handle formation breakout, at the same time breaking through a very key downtrend line. So we didn't have an immediate upside break here, because while we did get the breakout, it came back down a few times and really had to wait up until July for that to happen. And as that occurred, it's been a similar chain of events since that point, where the back and forth movement has at least gave us a 2 steps forward, 1 step back scenario, or staircase-like advance, whatever you want to call it. But we like to frame this in terms of trading ranges or trading boxes. And so it's very key in understanding how the market can come back. And again, if biotech continues to rally like it has, it's going to be a big piece to small caps as well. Now, in terms of looking at this from the go, no-go chart, and this is a weekly version, right? This most recent action finally turned the trend to bullish here. Now, we've seen this before, right? And sometimes been whipsawed a bit back here in 2023, right before the rollover into the fall. But once we got it again at the end of 2023, it led to some pretty good action. Not really huge amount of gains, but we know that XBI can be really volatile. So that did give us an indication that the trend was changing, and it obviously held up relatively well. Again, some volatility to start the year. More importantly, though, if we go even further back, we can tell there are 2 times in the past when volatility gave way to strong uptrending action captured here by the go, no-go trend turning to bullish. First time here was in the middle of 2016, again coming back from the volatility of 15, early 16, and led to strong moves all the way to the beginning stages of 2018. And then after that 2018 volatility for the market, especially XBI, which then extended really into COVID from that point, 2020, finally got that move or that trend change once more. And that really gave XBI the juice to rally. And it was part of that ultra growth-led advance back then, topping out, as we know, 2021. So this is all a few steps ahead. But if XBI can continue to take advantage of those short-term consolidation zones, then we can see how momentum from a weekly or longer term perspective can then work. Okay, number 4, XLF Financials, extremely important. Talked about this in a recent piece, noting that it was trying to, or is still trying to, take advantage of this most recent inverse head and shoulders pattern. Got a few fake outs here, especially on Friday after the jobs report. Pretty big negative reversal. Looked like potentially a bull trap. Still could be. That's why it's very important to hold where it is in the low to mid 50s here. And again, if you look at this in the same way, the entire rally, at least since the spring of 2024, again, characterized by what? Bullish patterns working. The only one that failed was the one we saw in February, which we know was market related. But as is always the case, large amounts of volatility build potentially large bullish patterns. We've seen this across the board now, and it's extremely evident here with the XLF having formed this big inverse head and shoulders pattern, got the breakout, which was initial fake out here, finally got through again. So this is why holding this area, which is right near the 50-day moving average, is key. Because if we see a rollover, not only is this smaller bullish pattern going to be negated, this much bigger one as well, with the target all the way up at 77. Okay, number 5, Ethereum. Same thing, all about trading boxes. And, it's been a leader the whole way higher, not over the last few weeks, but is trying to hold. Again, we saw it first here in April, consolidation, breakout, consolidation, breakout, so forth and so on. So the best thing that Ethereum has done so far, of course, is go up, but be able to digest those huge moves, which got RSIs into the 80 numerous times, and then be able to attract another round of demand each time. Now, this one is still, of course, yet to be broken out of, and we have to watch that closely because it's very similar to what happened here on the way up, had a number of trading box breakouts until the last one failed, right? This is a reversal, which then led to, of course, more of the same on the way down. So trading boxes work both in uptrends and downtrends, just about seeing those digestive phases either resolve higher or lower. And in terms of course, crypto, Ethereum here specifically tends to trend. We know there's explosive moves, but much more important than that is seeing how those following digestive phases work out. And actually, we have a bonus. So I wanted to talk about the difference between trying to pick the lowest price of something as an asset rolls over or the best price. I had a conversation with a client about this recently. And something that I've learned, trying to buy the lowest price, then it's something like UNH, the lowest price could be any one of these as it was dropping, free falling numerous times since last December. And the complexion of the stock really changed in December 2024, that it was just an aggressive dip lower as the rest of the market was able to hold up. Of course, that wasn't the case. And over the last number of months, we've seen some fake outs here, but it's all been characterized by just huge gaps in terms of news and disappointments of earnings, so forth and so on. And of course, it wasn't until the good news of Berkshire taking a very big stake in the company, we got that big breakout here, which looked like things changed. Now, so one of the things we talk about are the steps needed for a downtrend to turn into an uptrend. Number one is hold support or create support, right? So which is right here. Then you have to have an upside follow through, a higher low, and then that eventually forms what? A bullish pattern. And we recommended this stock on Tuesday morning before the market opened. Of course, there was news that's driving it higher. So far on Tuesday afternoon, it's up about 9%. So an emphatic breakout attempt right now where we can see that there's a target of 403. So this is just one example, but it just shows also that it's worth being patient when you see a stock fall out of bed like this, because you can even have some instances like this where it's a pretty strong move, but of course, then that gets negated with a big earnings miss. So at this stage, it's all about trying to hold this breakout now. And like we talked about with XBI, with XLF, with SIL, having one bullish pattern form at the very bottom of a huge downturn is one thing. Having that then get replicated and eventually build much bigger variations is what's going to get UNH potentially back to where it was before. And lastly, if you haven't already, I urge you to subscribe to our free newsletter, CappNotes, which is on Substack. So of course, CappNotes at Substack.com. We go into all of these details and a lot more, sharing some extras from our premium pieces that CappThesis clients see every day. Again, it's CappNotes.substack.com. CappThesis.com. See you there.